Uh, Sharing the file is causing me trouble. Are you able to see the file? Are you able to see this file? Okay, so screen is visible. At least I don't see the file which I'm sharing, but you can see this. So we will start the session. So we have understood the account receivable and somewhat some questions related to break-even point, that is fixed cost minus the non-cash flow expenses upon the contribution per unit. Your contribution is sales minus variable cost, and non-cash expenses are, for example, the depreciation, for example, the preliminary expenses written off. Those are non-cash expenditures. Okay. Now we move to the next topic of account receivable estimation, assessment, and interpretation of uncollectible accounts receivable. So there is some movement of account receivable. Some cash is collected, some cash is not. So we will able to understand the estimates of what is the assessment of account receivable, understand the uncollectible receivables, and interpret the same. Okay. What are account receivables? Account receivables or trade debtors is same meaning. Account receivables is known as trade debtors. Money owed by the customers. Okay. Money owed by the customers to the business are termed as account receivables. Some people call this account receivable. Some people call this a trade debtors. Both mean the same thing. Account receivable arises due to the credit sales. Cash sales may there is no account receivables, but once you give the credit sales, there will be some account receivables or credit transactions of service render. It is shown in the balance sheet as a current assets. So in the current assets, you have the cash and bank balances and you have the trade receivables, which represents the collectibles amount from the customers. Okay. So we need to estimate the account receivables. The sales department usually maintains the sales register and normally records the transactions customer wise. In short, the data ledger is maintained individually by the sales account receivable department. It records the following in the customer ledger. So any questions there, if any? No. So the transactions, the following are the recording of the sales register which you record. That is the transactions of sales, first thing, sales return, second thing, and sales allowances. Do you know the difference between sales return and sales allowances? Yes or no? Sales return is what you sell. Suppose you sell 5,000 unit and 50 units are sales return because of poor workmanship or because of some quality defect that the buyer is not able to process the 50 goods. He wants to return the 50 goods. That is called as sales return. Sales allowance is the discount given to the buyer for the uh, the buyer. Suppose you want to give the discount to the buyer because of some defect or because of poor workmanship, uh, or because of wrong quantity being given, because of wrong quality being given. So some discount is being offered to the buyer. That can be 10%, 5%. It depends on the buyer and seller relationship. Okay, the transactions pertaining to the amount received from customer. Suppose you have sold goods worth 10,000. Suppose he has paid you advance of rupees 8,000, balance rupees 2,000 is receivable from him. The balance in the customer ledger would represent the due amount to the customer. Okay. The sales account receivable department would allow the credit to the customer for goods sold on credit. On cash basis, there is no need for you to record the name of the party, but on credit basis, there is a need for you to record the sales and the time. Okay. Example, net 30 days may be credit term allowed. It means that a customer has to pay 30 days from the date of the invoice. Okay. Any questions? First payment term is immediate, which is the customer has to pay the amount on immediate basis. No credit period is allowed. Net end days, 30 days, 15 days, that can be the term there. That means the customer has to pay the sum 15 days or 30 days, whatever is written there. End days after sight. So the buyer has to brought the LC or the invoice in front of the customer, and within the sight of the bill or the invoice, he will make the payment. Okay, the payment is to be made within n days from the date of receipt of invoice. It is mentioned as 45 days or 30 days. Any question? The uh, if loss of 15,000 is incurred in selling for cash office equipment having a book value of 50,000. The total amount reported in the cash loss from investing activities of these sections of the statement of cash flow is if loss of 15,000 is incurred in selling office equipment having a book value of 50,000. The total amount reported in the cash flow from investing activities is 35,000. Suppose the book value is 50,000. There is a loss of 15,000. So balance is 35,000. The answer is 35,000. Is it clear also? So the account receivable department makes an assessment of receivables from every customer. Normally they prepare what you call as an aging analysis that will have 3, 4 columns in between, less than 30 days, more than 30 days, but less than 60 days, and more than 60 to 90 days, and more than 90 days. Though the amount will gradually decrease, you will find the maximum sum is in 0 to 30 days or 30 to 60 days. But beyond 90 days, there is some effort required to recover the money. Okay. Aging statement is a statement prepared categorizing the debtors outstanding for a period of 30 days, 60 days, 90 days, and more than 90 days. Okay. That is the aging of this of the customer account. The account, what do you call is that the write-off is the method of allowing the bad debts. There are two methods of allowing the bad debts. One, the direct allowance, and second, the provision allowances method or provision method. Allowances method or provision method is permitted in the Companies Act, and direct write-off method is permitted for partnership or individualship. Okay. The customer account balance, which has no chance of being realized, it terms as is termed as uncollectible. So there the bad debt is to be provided. Normally they remain overdue for 30 days, 40 days, 45 days. They remain overdue for a reasonable period of time. The business undertakes all legal and possible methods to collect the money. So there should be no effort left unturned. We should have the amounts collectible from the customer. In spite of all the measures, the account remains overdue and becomes of doubtful of realization. After a specified period, The period can be 180 days, 90 days, or whatever. The doubtful account becomes uncollectible, and for this, you have to make the provision or you will directly write off the account. There were various reasons for an account to become uncollectible. Reasons for a business to assume an account is uncollectible include the other party refused to pay or the buyer has gone the financial difficulties, making it impossible for the firm to pay. Okay. So any questions, if any? The answer is 35,000. For above, the answer is 35,000. You can check the answers from the answer sheet. If the answer is different, let me know the answer. Any questions? So the policy for classification of the AR, what do you call the AR? Account receivable, differs from business to business. Once the account is classified as, what do you call it, as uncollectible, then it should be written off to the income statement. It is also termed as bad debt. But you won't tell to the customer that the amount is written off by you. You pursue indirectly, but the amount is written off in the books of account. There are two methods of evaluating and interpreting the AR. They are the right rate of method. So for company, this method is not permitted. And second is allowance method. This method is permitted because this method assumes the accrual method. Okay. Now we will understand both the methods and we will write down both the methods because exams will come of any of the method. The company decide that the account receivable has no reason to be realized. So first thing to do is to speak to the officials of the company whether the amount is recoverable. If they are sure that amount is not recoverable, so first is that uh, for 90 days you're allowed the credit. More than 90 days you have to ask the customer whether he'll pay or not. But suppose he is not able to pay, then you have to make a provision or do a write-off, and they are known as the bad debts of the company. All the recovery measures attempted by the company to realize the amount has failed and the company is confident about the default committed. The company completely writes off the account receivable. Tax benefits are available under this method. Bad debts debit to customer. The entry to be passed is bad debts debit to customer account. There is 1 lakh rupees written as the amount collectible, of which this much amount 75,477,742 is written off and 25,000 he is paying. Okay. Second method is allowances or the provision method, provision for bad debts. The under the allowances, the company estimates the doubtful debt based on the previous track record. So in the allowances method, the method is assuming that the company will get some amount. Okay. Under this method, provision for bad debt is created. That is, provision for bad debt is created at the end of each financial year. So you will not come to know that how much is the customer outstanding or how much is the balance, which is calculated automatically. The company will calculate automatically that this is the balance. Okay. and it is revised from year to year. The provision for doubtful debt is appropriate from the P&L debit to provision for bad debts. This will go to the P&L and this will go to balance sheet. Illustration, do the illustration 11. I'm giving you 3-4 minutes to do this exercise. So have you understood the question? Have you understood this question? There are two methods. One is you are directly writing it off, and second method is you are creating a provision. So first question is to be done, that means that you are writing it off directly, and second question is you are creating a provision. So these two entries you are required to prepare. So are you able to do this question? Okay, so we develop and explain the internal control procedures. So internal control procedures are of two types, that is preventive and deductive. Preventive means that the internal control system will prevent the entry to happen through these first, suppose uh, the wrong transaction is happening at the airport. So internal control is the security check. That is the internal control. They will scan the entire luggage and you before you enter the airport. And suppose you are able to sneak in, and suppose you want to do some work, you will be caught by cameras. The cameras are detective controls. So internal systems have two types of control: prevention, they will prevent the wrong thing to happen, and second is deductive, detect, they will check the wrong thing happening. So internal control are the procedures, guidelines, or company policies business owner use to safeguard their business information and operation. Business owners often use internal controls to specifically protect the information. Internal control procedures help in the process of avoiding, first is they help in avoiding the errors, whatever may be, they help in avoiding the errors. Second is prevention of fraud. Second big problem is they help in preventing fraud in the business. Some of the internal control procedures which could be implemented with reference to sales and handling of account receivables are, okay. So these are the specifically some processes or some internal control procedures. So just a minute. Yeah. So one is proper billing system. There is a proper billing system. There should be a proper billing system to monitor the quantum of sales. That is, first is the invoices are serially numbered. So there can't be one के बाद two आ रहा है, one के बाद five आ रहा है, five के बाद 10 आ रहा है. So that won't happen. Okay. Proper billing, there should be proper billing system to monitor the quantum of sales. Proper billing system would help in preventing unauthorized sales or unbilled sales. This would also control the credit terms that are offered to the customer. So proper billing system, if you have, that will prevent the frauds and the mistakes which are happening in the company. Second is the segregation of duty. There should be segregation of duties with respect of handling the invoice, second credit memo, and receiving customer payments. There should not be one person who is doing entire activity. If the company has to have control, the invoice payment should be done by X and cash collection should be done by Y. When same person is handling all the activities together, it would result in fraud. Okay. For example, single person is handling customer cash receipt and is authorized to raise credit memo. It will result in embezzlement and misappropriation of cash, as the employee would receive the cash but raise a credit memo to close the customer account. Online transfers, they should be must. There should be reduction of receipts through checks from customers. Online transfer would come from the customer to the company's account. Nowadays, you have Paytm, Google Pay, they are a must for the company. With online transfer of fund, the risk of fraud can be reduced and the amount directly credited to company account. Audit trail. This is a must for companies. Nowadays, the audit trail is a must. There should be an audit trail of billing software and collection software. It should help in tracking down the transaction. The access to the software should be completely restricted in order to have accurate data. Audit trail means where the final proceeds were shown. So if you know the source of the billing system, you would be maintaining the audit trail, and because of the audit trail, it will help in detection of early frauds. Okay, approval of credit term and contract terms, this should be done by a higher executive. Pre-numbering of invoices, this should be done. Invoices should be continuously numbered. Control over bad debts, this is a must. So these are some internal controls which the company should implement. Next is asset accounting. So if in case anyone has a question, please ask. अरे वीडियो चलाया यहाँ से. Any question you have, please ask. Otherwise, we'll end the class. Okay. Okay. Bye.